The only thing standing between you and your goal is the story you keep telling yourself as to why you can't achieve it. Jordan Belfort. Do not save what is left after spending, but spend what is left after saving. Warren Buffett. An investment in knowledge pays the best interest. Benjamin Franklin. Are you tired of living paycheck to paycheck, feeling like your money disappears before you even know where it went? What if there were simple but powerful rules you could follow to unlock true wealth and financial freedom? With the new year just around the corner, there's no better time than now to learn these secrets. In this video, we're going to expose the money rules that the wealthy have been using for decades, rules that can transform your financial situation if you start applying them today. Stick around because what you're about to learn could be the difference between just getting by and building lasting wealth. The aim of this video is to empower you with practical, time-tested strategies that can help you unlock financial success and independence. We'll cover everything from essential budgeting techniques to advanced investing principles. These aren't just theories, they're actionable rules you can start implementing immediately to see a significant difference in your financial life. 1. Pay yourself first. One of the simplest yet most powerful financial habits is paying yourself first. This means prioritizing savings and investments before you even consider spending on discretionary items. Instead of viewing savings as whatever is left over at the end of the month, set aside a fixed percentage of your income, say 10 to 20%, the moment you get paid. By automating this process, you create a disciplined approach to growing your wealth without having to make constant decisions about it. Think of paying yourself first as planting seeds for future financial freedom. Every dollar you save or invest is a step closer to financial independence. Over time, these small, consistent actions compound to produce significant results. For example, setting aside $300 a month at an average return of 7% annually can grow to over $120,000 in 20 years. The habit itself is more important than the amount. It's about creating a mindset of prioritizing your financial future. For many, this can be a challenging shift because it feels like you're restricting your spending. But remember, this isn't about depriving yourself. It's about building a financial safety net that allows you to live life on your terms in the future. 2. Make your money work for you. Wealth isn't just about earning money. It's about making your money work for you. The wealthy understand that money is a tool, and the goal is to grow that tool to generate even more money. This is done through investing in assets that appreciate over time, like stocks, real estate, or even starting a business. The key is to put your money into places where it has the potential to multiply, rather than letting it sit idle in a low-interest savings account. For instance, if you invest in dividend-paying stocks, you can earn regular income without having to actively work for it. Similarly, buying real estate properties that generate rental income can create a steady cash flow that increases your net worth. The point is to move from trading time for money to having assets that earn for you even when you sleep. You might think investing is risky or complicated, but it's a skill that can be learned. The risk of not investing is far greater, as inflation will steadily erode the value of your money. The sooner you start, the more time you give your money to grow through the power of compounding. 3. Don't rely on a single income stream. Relying on one source of income can be dangerous, especially in today's uncertain economic climate. If your primary income source were to suddenly stop, say you lose your job or your business faces a downturn, your financial stability would be at risk. That's why it's important to create multiple income streams to ensure you're always bringing in money from different sources. Consider developing side hustles, freelancing, or investing in income-generating assets such as stocks that pay dividends or real estate. This diversifies your income and reduces your financial vulnerability. You could also think about monetizing a hobby, teaching a skill, or even starting a blog or YouTube channel. The options are endless, but the idea is to find something that aligns with your interests and skills. The wealthiest people in the world often have multiple income streams, and for good reason. This approach not only provides financial security, but also opens up opportunities to reinvest in other ventures, further accelerating your path to wealth. Are you getting value from these tips? Make sure to like this video, subscribe to the channel, and click the notification bell to get more insights like these. Also, Don't miss our video, Escape Credit Card Debt, linked in the description below. It's a must-watch for anyone serious about breaking free from the chains of debt. 4. Time in the market beats timing the market. Many people believe they can outsmart the stock market by timing when to buy and sell. However, the data consistently shows that staying invested over the long term usually yields better results than trying to predict market movements. The phrase, "time in the market beats timing the market," captures this idea well. It means that the longer your money is invested, the more it can grow, thanks to the power of compound interest. For example, consider the historical performance of the S&P 500. While there have been significant drops in the market, the overall trend has been upward growth over decades. If you had invested during a market downturn and held onto your investment, chances are you would have eventually made a profit. On the other hand, trying to jump in and out of the market could mean missing out on the best days of growth. The key takeaway here is to stay invested, be patient, and avoid making decisions based on short-term market fluctuations. Investing is a long game, and time is your greatest ally. 5. Don't let emotions drive financial decisions. When it comes to money, emotions can be your worst enemy. Fear and greed are two powerful emotions that can cause people to make irrational financial decisions. During market highs, greed can lead to overconfidence and risky investments, while fear during market lows can prompt panic selling at the worst possible times. A good strategy is to have a clear financial plan that you stick to regardless of market conditions. This plan should be based on your goals, risk tolerance, and time horizon, rather than on emotional reactions to the market. For instance, during a market downturn, instead of selling off assets in panic, view it as an opportunity to buy quality investments at a lower price. Remember, the market rewards the patient and punishes the emotional. Staying level-headed and sticking to your plan will keep you on track toward reaching your financial goals. 6. Leverage tax advantages. Taxes are often one of the biggest expenses people face, but there are ways to legally reduce your tax burden. The wealthy often utilize tax-advantaged accounts, deductions, and credits to minimize what they owe. For example, investing in retirement accounts like 401(k)s or IRAs can provide significant tax benefits, allowing your investments to grow tax-deferred or even tax-free in some cases. Other strategies include using tax deductions related to business expenses, real estate depreciation, or charitable contributions. Understanding the tax code can save you thousands of dollars a year, which can then be reinvested to grow your wealth further. It's not about avoiding taxes. It's about being smart with how you manage them. Hiring a knowledgeable accountant or financial advisor can also help you identify more strategies tailored to your financial situation. The goal is to keep as much of your hard-earned money as possible and put it to work for you. 7. Stay prepared for the economic downturn. Economic downturns are inevitable, and the best time to prepare for them is before they happen. Having a financial safety net, such as an emergency fund that covers at least 6 months of expenses, is essential. This will ensure that you can weather the storm without resorting to high-interest debt or liquidating your investments at a loss. Diversifying your investments is another way to protect your wealth. Don't put all your money into a single asset class, such as stocks. Consider a mix of assets, including bonds, real estate, and even precious metals. This will help reduce your overall risk and provide some stability during market turbulence. Finally, keep an eye on economic indicators and trends. While you can't predict the future, being aware of what's happening in the economy can help you make better decisions about when to adjust your financial strategy. Staying prepared gives you an advantage when others are caught off guard. We've uncovered some essential money rules that can help you unlock wealth and financial freedom. By implementing these principles, you'll be well on your way to taking control of your financial future. But there's even more to learn about money that can take your financial journey to the next level. In our next video, Money Secrets Exposed. Must know. Learn the truth. We'll dive into hidden strategies and lesser-known truths about money that could transform your approach to building wealth. If you found value in today's video, don't forget to like, subscribe, and share it with friends who need this knowledge. The information provided in this video is for educational purposes only and should not be considered financial advice. Always consult a qualified financial professional before making any financial decisions.